Welcome to our today's revision session. We are going to start the revision of the April 2024. You allow me to do question 2 today. Then later on we'll come to question number 1. I want us to do the partnership question. That is question number 2. I hope you have the question papers. Now let me read question 2. Melody and Olivia commenced a partnership business on 1st January 2023, sharing profit or loss in the ratio of 2:1 after allowing interest on the capital introduced by partners at a rate of 10% per annum. Olivia was to receive a salary of 80,000 shillings per month starting from 1st February 2023. Melody and Olivia have not employed a qualified accountant, hence the business lacks complete accounting records. The following summary of the bank statements for the year ended 31st December 2023 was provided. So we have the receipts, then we have payments. That is a summary of the bank statements. Summary of the bank statement. And note that these were prepared by the accountant who is not qualified. The following cash payments were made before banking the balance of the cash received from customers. There are payments that are made: motor vehicle operating expenses, wages, general expenses, drawings. Additional information number 1. During the year ended 31st December 2023, discount allowed to customers amounted to 245,000 shillings, while discounts received from suppliers amounted to 110,000 shillings. Number 2. As of 31st December 2023, the amounts owing to suppliers amounted to 1.5 million, and the owing amount by customers was 3.1 million. An amount of 400,000 shillings owing by a customer was written off. Number 3. As at 31st December 2023, rates and insurance prepaid amounted to 50,000 shillings and 10,000 shillings respectively. 4. Inventory was valued at 2,410,000 shillings as at 31st December 2023. 5. The godown had been occupied since 1st January 2023 as an annual rent of 1 million shillings. 6. Depreciation is provided on a straight line basis as follows: motor vehicles 20% per annum, equipment and furniture 10% per annum. Number 7. The partners had taken goods for their domestic use as follows: Melody 100,000 shillings, Olivia 150,000 shillings. Assume a 52-week year. Required: Roman 1. Partnership statement of profit or loss and appropriation account for the year ended 31st December 2023, 10 marks. B. Partners current accounts as at 31st December 2023, 4 marks. C. Statement of financial position as at 31st December 2023, 6 marks. So here is the question on partnership accounts. Required: A. Partnership statement of profit or loss and appropriation account for the year ended 31st December 2023. December 2023. Now, this is a partnership that commenced business on 1st January 2023. One important thing to do, candidates, when faced with such a question is to check the dates. When is the accounting period? So the accounting period for this partnership begins on 1st January 2023 to December 31st, 2023. 12 months. Financial accounting periods comprise 12 months. So it is from 1st January 2023 to December 31st December 2023. All right. So then we also read that this partnership has not employed a qualified accountant. So meaning these records are incomplete. Beginning with a summary of the bank statements. All right, so that is a summary of the bank statements for the year ended 31st December 2023. Then what else can I say? You look at the additional information. The additional information will also help us in preparing these statements. So first of all, we are required to prepare a statement of profit or loss and appropriation account. Statement, partnership statement of profit or loss and appropriation account. So let's begin by preparing the statement, partnership statement. There are two partners here, Melody and Olivia. So you have to write Melody and Olivia. Statement of profit and loss appropriation account. And loss appropriation account and appropriation account for the year. This is for the year ended 31st December 2023. So we have shillings, two columns in thousand. It's very important. So please, I hope you have a notebook, you have a calculator. I don't have one. I'm going to rely on your calculator. So make sure you participate in the learning process. When you are doing the calculations, make sure you also calculate, because as you attend these lessons, you are the one going to sit for the exam. The examiner is going to test you on skill and speed. Skill and speed. You can only gain speed through practice. So as we are working out these problems on the board, make sure you practice. Make sure you practice. All right. So the first item in preparing statement of profit and loss account is sales. 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 Now, do we have the figure for sales? The answer is no. So how are you going to calculate the sales for the year? Because this accountant is not qualified, so we can't pick the figure for sales from the statements provided, this information. So how are we going to determine the sales? Let me hear from you. Cynthia, how do we determine sales? Dowd says we open sales account. Sales account. Dowd says we open a sales account. Cynthia says prepare sales control account. Sales control account. Prepare sales control account. That is correct. Prepare sales control account. It is called sales ledger control account. We have to prepare a sales ledger control account. So we're going to have workings. We we have, this is working number 1, prepare sales ledger control account. Sales ledger control account. It is through this sales ledger control account that we'll be able to determine the amount of sales. Sales ledger control account, or debtors ledger control account. Is that clear? In this sales ledger control account, there are items that we debit and there are items that we debit. When you sell on credit to customers, all right, the debtors account is debited and sales account credited. So we are going to check items from the information provided. Which items are we to debit and which items should we credit? Then the sales value will be the balancing figure on the sales ledger control account. Do you understand? So, which items do we debit in this sales ledger control account? Can someone try that? Because I think we covered the sales ledger control account in our class. Now tell me which transactions are recorded in the sales ledger control account from the information provided. So the first item is to have the balance brought down. Balance brought down. It could be either be on the debit side or credit side at the beginning. Then at the end, we can also have balance carried down. But in this question, we are not going to have, we should not expect balance brought down because the partnership business began on 1st January. This partnership business has been in business for just 1 year. That's to tell you that there are no balances that were brought down anywhere in these accounts. This business is only 12 months old. So there is no balance as at 1st January. So there is no balance here. That's why I told you when preparing financial statements, it's important for you to check the accounting period. When did the business begin? Is it a new business that you are preparing the financial statements, or is it an ongoing business? If it's an ongoing business, maybe we could have balance brought down. But given that this business has only been in existence for 12 months, there is no balance brought down. Okay, that clear? So what else do you think should be included in this account, Laura? Now look at additional information number 1. It says that during the year ended 31st December 2023, discounts allowed to customers. Discounts allowed to customers. Allowed to customers amounted to 245,000, while discount received from suppliers. So that tells you that the discount allowed is an item that we are going to credit this account. So we have discount allowed. Discount allowed reduces the balance on the sales ledger control account or debtors ledger control account. The amount here is 245,000. That has to be credited. Then we check if there is any other item that reduces the debtors or sales ledger control account so that we credit it. Now look at the information below the receipts and payments. We are told there that the following cash payments were made before banking the balance of cash received from customers. The following cash payments. I'm reading information just before additional information. The following cash payments were made before banking the balance of the cash received from suppliers. So you can see there we have motor vehicle operating expenses, wages, we have general administrative expenses, drawings, there is drawings, Melody 15,000 per week, Olivia 12,000 per week. So those are cash payments that were made before banking the balance of the cash received from customers. Cash received from customers. That is to mean customers paid cash. And when cash is received, this cash has to be banked. Before banking this cash, there were payments that were made. And you are given the information relating to the payments that were made. Okay? Do you see that? So can you calculate how much was paid before the cash was banked? Give me the total. Give me the total, please, of the total of the amount that was the expenditure before banking. How much is it? 631. Laura says 631. So you need to have a working here for this is working too. We are calculating the amount here is the cash payments. Cash payments before banking. Cash payments before banking. The majority of you have said 631. Let's see if that is true. The first item there is motor vehicle operating expenses. Motor vehicle operating expenses. The amount is 258,000. Wages. The amount is 296,000. General admin expenses. The amount is 50,000. Drawings. This is money that Melody took away from the partnership, Olivia took away from the partnership, and it is 15,000 per week. And if you look at the additional information number 7, you are told assume a 52-week year. A 52-week year. So you multiply by 52. That will give us the total amount for Melody. Then this is Melody. Then Olivia is going to be 18. Is it 18? 12,000 times 52 weeks because it is per week. So give me that total. Give me the total there. So that will be the cash payments before banking. Cash payments before banking. What is the total? Laura says 2008. 2008. 2,008,000. So candidates, you are supposed to be very keen because that was a trick there. You are told 15,000 per week, but there are 52 weeks. And remember, we are preparing the financial statements for the whole year. A year here has 52 weeks. So That is the amount that was paid before banking. And you need to understand that this is a business that is selling to customers on credit. There are those customers who may pay directly into the bank, but there are customers who pay cash. So when this cash is received, because the accounts are prepared by an accountant who's not qualified, expenses are made out of the cash that is received. It's not a good practice in accounting. When cash is received, there is always a rule that all cash must be banked before spending. You understand? That's why, if you recall, when we were studying the petty cash book, it's a good practice that all sales, cash sales, are first banked. Then if there is any money that the business needs to spend, then that money is taken to the petty cash account, so that expenditure is made from the petty cash book. But you see, that is the case. It's not the case because the accountant here is not qualified. And now that you are training to be accountants, you are expected to advise the company or the business you'll be working for that all cash sales must be banked first. Then you have an impress system where the cashier is given money to pay expenses like these ones you are reading here: wages, general expenses, money to pay for things like newspapers in the office, or minor petty cash expenses. You understand? I want you to understand, because you see, the examiner can repeat the same question. So 2008, okay, was paid out of the sale, so that reduces the balance, okay, on the debtors control account. So this is cash payments. 2008. It's 2 million, is it not? It's 2,008,000. 2,008,000. So let us check if there is any other item that has to be recorded in the sales ledger control account. Anyone with a clue? What do you think should be debited here from the information provided? Apart from these two, do you have any other? Anyone? I'm giving you an opportunity to contribute. What do you think should be credited to this account? Is no one to attempt?